I'm Alan Kenny, Editorial Director with REIT.com, and this is Quick Study with Brad Case. Okay, Brad, we're in early December. What happened in November? What were your general impressions with the REIT market?
Well, it wasn't a very dramatic month. REIT investors saw their total returns down about 1/4 of a percentage point during the month of November. Mortgage REITs did a little bit better. Mortgage REITs were up nearly 1%. And in fact, even though mortgage REITs had a good month of November, you still see very, very high dividend yields in the mortgage REIT sector of nearly 12%. But it was a fairly quiet month in other asset classes as well. The broad stock market gained only 0.3% on the month, and so I think investors are really in a holding pattern, waiting to get more information about the course of the macroeconomic expansion and the intentions of the Federal Open Market Committee in terms of when and by how much they'll allow interest rates to go up.
How about specific sectors? What were the big stories there?
Well, the strongest performing sector during the month was timber REITs, which are up 13.5% just in the month of November. And that's important because the timber sector had been lagging the rest of the REIT market during the earlier part of the year. Other strong performers during the month of November were the self-storage sector and the residential sector, and those have really been among the strongest performers during the REIT industry for the entire year. Weaker performances were REITs in the lodging sector and in the healthcare sector. Again, situations where they've lagged a little bit during the year, and November was no exception for those.
So in closing, do you feel that REITs are undervalued relative to the broader stock market?
Well, there are some investors who think that REITs may be undervalued, especially relative to property valuations in the private part of the real estate market. And there certainly does seem to be growing evidence that there's a divergence between private market valuations and public market valuations in real estate. But you have to keep in mind, either that means that REITs are undervalued, or it means that private real estate investors are paying too much for the assets that you're getting. Part of the reason that people think that REITs may be undervalued is the fact that so little has happened during the year, with REITs up only 1% on the year, even though we've continued to have stronger news about the macroeconomic situation. But you have to keep in mind, last year we were in a similar macroeconomic situation, and yet REITs gained more than 27% on the year. In 2013, it was another fairly quiet year for REITs, up only about 3% on the year. But in 2012, REITs gained more than 20%. So we've been in a period of growth, moderate growth in macroeconomic conditions, and that's good news for real estate investors. But we can't tell exactly when real estate investors are going to benefit from those strengthening macroeconomic conditions.
Brad, thanks so much for your time.
It's a pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.